ASX companies that are linked to the Tesla supply chain have been roaring ahead with massive price gains over the last few months. In part, these gains are thanks to Tesla's supply chain and how connected these companies are to Tesla. We'll look at how related they are, but first we need to understand how they fit into the Tesla process and a few other key aspects that drive this side of the ASX. That includes what the prices of lithium and other commodities that go into the Tesla batteries have been doing, how those price movements have been positive for companies that are not even related to Tesla, plus what the demand side of the electric vehicle market looks like and how that is driving harder than many previously thought. This is Shares in Play, where we look at the leading thematics on the ASX and the top companies within that group that are leading the market higher. Click on the subscribe button down here and the bell to get alerted when the latest updates come out so you can see which companies are pushing higher and higher. To understand electric vehicle demand, we start with a recap on Tesla, their electric vehicle and very strong media presence. Electric vehicles, including Tesla, have engines with far less moving parts. Take the internal combustion engine, or ICE. That engine has about 2,000 moving parts. There's a lot that can go wrong, a lot of moving parts, a lot of lubrication, heat, wear and tear, and a lot to maintain. You probably own a car and understand these issues. The electric vehicles have about 20 moving parts in the engine components. So as you can see, there's far less that can go wrong and possibly much more reliable. If we have a look at the cost to drive 100,000 miles in an internal combustion engine, the costs are just shy of $30,000 in US terms. The maintenance is about half, and then the other half is made up of gasoline or petrol or fuel. Now, if we look at that in contrast to the electric vehicle doing the same 100,000 miles, we're looking at about $4,000 or just under $4,000 US to maintain the vehicle. And then if you're using the solar electricity, it's about $2,500. Plug in, recharge, and get your 100,000 miles from solar energy sources. Next, we need to understand what goes into a Tesla. We'll use the Tesla Model S, the first one that they launched to mass markets, and we see that it's about 29% aluminium, based on the weight of the vehicle and the weight of the aluminium that goes into the Tesla Model S. This great combination of lightweight car through a heavy use of aluminium and other lightweight metals is used to offset the heavy batteries, and it worked. It worked phenomenally well. And to understand just how well it worked, have a quick look at an Australian V8 supercar versus a dealer room floor Model S going head to head. We can see here that the two are tearing away, but the Model S with all-wheel drive launches and leaves behind the Australian V8 supercar. Now that's fast and incredibly fast, but we're not here to look at the car and its performance. We want to know the companies that are going into building that car, and we need to understand the commodities. We've mentioned aluminium is one of them, but we need to understand the other raw materials, and they've got to come from somewhere. And we know Australia is a well-known market for commodities, a commodity-driven economy. The flow-on effects are substantially strong, and we can see that here with Euro Magnesium, an ASX-listed company with ticker EMN. In their announcement, they said that the market has responded to positive news from Tesla Motors, which announced it would switch to revolutionary new batteries with a cathode that contains 1/3 magnesium and revealed plans to mass produce them. Now, this announcement was not related to EMN, it was Tesla's announcement. But the critical aspect here is the flow-on effect to the supply chains for these battery metals. It requires massive investments in order to keep up with demand for these electric vehicles, and that saw EMN's share price skyrocket. What we're looking at here is speculation for takeover or large stakes, buy-ins, strong offtake agreements for these miners that are in Australia or Australian listed miners with tenements and projects in the United States, Europe, and other places that have significant market upgrades and huge demand for gigafactories and the likes building batteries for electric vehicles. Batteries were the heavy component in the Model S, and aluminium was 30%. Now, this is less so for more recent models of Tesla, where the Model 3 has more steel and other materials that are cheaper to produce and cheaper to get into the cars, and that's also similar in other companies as well, as we've seen the premium Audi A8, being their saloon sedan, also move away from that high use of aluminium. Now, with that less aluminium, it's less demand for aluminium, and aluminium comes from a mine. Without getting too heavily into the process of bauxite to alumina to aluminium, you can see here some images that talk about the process or walk through it. Key ingredients are oil, gas, coal, and a bucket load of electricity. So much electricity, in fact, that one Rio Tinto aluminium smelter in New Zealand consumes 18% of the country's power consumption. That's just by Rio's aluminium smelter that has announced they'll be closing soon thanks to the high cost of energy. It's also part of the industry moving away from that high use of aluminium in their performance cars like the Tesla Model S, the Audi A8 being a big heavy sedan, and substituting it with other materials like what's gone into the Model 3 Tesla. But we want to know why these companies are running so hot. The companies that have minerals that are going into the batteries, the cobalt, the nickel, the lithium, the graphite, and that's what we're looking at. When we look at the battery in the Tesla cars, we see that's where lithium comes into the mixture. Tesla has been the largest buyer of lithium-ion batteries, and now, with the Gigafactory, it is trying to become the largest producer of lithium-ion batteries. So says Kurt Keltley, Tesla's longtime director of battery technology, and is finding economies of scale through the raw materials. So they're nickel, cobalt, graphite, and lithium, which serve as the biggest cost drivers for the overall battery cost. It's already been confirmed that Tesla has reduced their battery cost by over 35%. But when talking to analysts about comparing which battery combination, what the chemical mixture is going to be, and which one's going to be the top or the leader in 5-10 years' time, they tell us that it's akin to comparing beta to VHS. If you know what that technology is, you'll appreciate that better technology may not actually be the better product that goes to market and the one that wins with the companies earning the most profits. So when we go to the Model S battery, we see that it's 80% nickel, 15% cobalt, 5% aluminium, but that mixture has changed with the Model 3 and the other innovations since. What we learn here is that even if you have the winning combination for the Tesla Model S battery, the perfect chemistry mixture for that product and getting it to market, and you're part of the supply chain for the Tesla Model S, that can and will change through technology and innovation for the Model 3, and that demand has a different chemical mixture and construction to what the Model S had. So we're looking at the forefront. To be a winning company on our ASX, you need to be consistently supplying into not necessarily today's technology, but the next technology and the next innovation. And that's where the anodes come in, because the anode is where a huge amount of technology and innovation has been happening and changing the demand and construction of these batteries. Now, Chinese anode demand production capacity represents about 85% of the global capacity, and critically, over 90% of the current capacity that's under construction, so we're talking new production here, we're talking innovation, 90% of that is in China. So it's critical to be distributing towards those markets, to be connected to those markets, and that is where Australian listed companies have been benefiting significantly. While Tesla is a very large electric vehicle company, BYD Co, based in China, is even larger, and there is a huge market there. We can see that the demand for Chinese residents or Chinese citizens considering of buying an electric vehicle is almost double that of a US citizen considering buying an electric vehicle. This shows us the demand, the innovation, and the adoption within those cultures for technology and the new cutting edge. That cutting edge is being pushed by European and US markets. We did see late last year that the UK was pushing and changing their cuts and targets for cutting out diesel vehicles and pushing towards electric vehicles and hybrids. That pushed up the markets for lithium, and we can see here on the charts that lithium prices pushed up significantly. However, if we look at that in comparison to the last 5 years, we see that the spike was even higher in 2017. So the UK has pushed the markets and started the wheels in motion, but the biggest heavy hitter to come to the lithium and battery and anode markets in the last year has been Joe Biden. When he was announced as being president-elect coming into the US, the markets took off significantly. So if we have a look at the graphite market here, we can see that the share price or the market for the commodity went up significantly, and that was with the expected rise for battery raw materials and the other significant news around that. We're talking about eligible foreign businesses. The European Union had approved a funding of 2.9 billion euros to support the supply chain for the transition to electric battery industry, and that was across 12 member states. For the US, President Biden announced plans to replace the US government fleet with electric vehicles, EVs, further supporting this increase and shift. Along with the European announcement, we also saw plans for an estimated 600 gigawatts annual production for capacitor lithium-ion battery cells within Europe, and that's equivalent to 7 to 9 million electric vehicles. You can see here on the chart, once again, all of that planned production coming into Europe. There's a significant uptick there, and this transition is well and truly underway. Other news that we did see, and it's important to look at, is the joint ventures happening within the industry. We're seeing electronics companies joint venture with motor companies. Now, Panasonic with Tesla and Toyota, we're seeing BYD here, we're seeing Volkswagen Volkswagen. We're seeing Nissan and Mitsubishi and other large names tick in with electronics companies to help get this through to market. This has been impacting the price for lithium on the open market. We've seen those prices move up. What has also happened in the US is that Biden has pledged to restore the full federal tax credit for electric vehicle purchases, being great for General Motors and Tesla, which already used theirs up a year ago. Biden also proposed to convert all 500,000 US school buses to be electric by 2030. Also pledged infrastructure with slightly vaguer parameters, but for a call for a national network of 500,000 electric vehicle chargers, but no clear plan of how to get there yet. However, some of the 50 billion earmarked for the roads and highways may include this. There will also be 5 billion of the 300 billion Build Back Better plan aimed at battery and energy storage to improve the range and reduce the cost of electric vehicles. There will be a 10% tax credit for creating American jobs in the automotive industry, with specific mention to retooling a car factory to produce electric vehicles. There are indications that the Californian framework of increased fuel efficiency by 3.7% each year will be rolled out across the entire US, which will inevitably lead to manufacturers producing more hybrids, plug-in hybrids, and battery electric vehicles, which all points to lithium miners running strong and loops in the concept that had gained a lot of traction before COVID-19, but accelerated even more so throughout COVID-19. This wasn't using hand sanitizer, this was the supply chains being shut down. The rush on toilet paper that we saw in Australia, but think of that for panic hoarding for business's perspective. You might be in the Tesla factory pumping out your door welds on the Model S, but if you cannot get the aluminium to the lithium or the rare earths for your batteries, you'll find a yard full of cars with no batteries. Tragic for a company's earnings and share prices. Thus, we have the mine and factory distance shortened. There's tightening up the supply chains, they're locking them down, they're buying the mines, they're signing on the offtake agreements so that the companies, some of them listed in the ASX, are bedded down and their supply contracts are locked in. Now, the logistics here are absolutely critical. Have a look at the farm to fork situation, where the logistics is that unknown component, that variable, and that's what really fell apart in COVID-19 and killed a lot of companies' earnings significantly because they couldn't get their supply chains. That's where we're looking at the top stocks on the ASX that are running off the back of this Tesla euphoria. It's lithium companies, lithium miners that have tenements based in the US or based in Europe, close to those new gigafactories that are coming on and producing lithium-ion batteries. That supply chain is critical for forward planning across the new world post-pandemic, and that's where these companies are run significantly. So that supply chain is aimed at being as short as possible, and it's not an instant change. It takes a long time to get the mines up, the supply chains, and shore up the quality going into the cars. Chinese parts are required for the majority of the world's electric vehicles, but if you had a mine with close proximity to the US Gigafactory, and that's been a gold mine for you this month. Those share prices have been up significantly. So here they are. These companies on the ASX are now somewhat linked to Tesla, and here are their performances over the last month. Now, to get the full list of companies that are directly linked with Tesla, somewhat linked to Tesla, and those that are in the industry and market space that are running off the back of these Tesla announcements, click on the link below in the description to download that full report. And you can click subscribe here to get the latest update and the bell so you get alerted to when they come.